How to play the buy now, pay later trade amid rising adoption in a higher interest rate environment with the Yahoo Finance playbook. Joining me now, we have Dan Dolev, Senior Financial Technology Analyst at Mizuho Americas. Dan, it is always great to see you, especially on set.
Thank you.
Let me start big picture. BNPL, buy now, pay later. Give us a sense, Dan, how big is this market at this point and how fast is it growing?
Great question. So U.S., say retail, we're talking, U.S. e-com is about $1 trillion business. Buy now, pay later today is probably pushing like 70, 80 billion. It's tiny compared to e-com, and it's even smaller if you think about total U.S. retail, which is like 7, 8 trillion, right? So it's big, it's growing fast, but it's still a very small fraction of the overall opportunity.
Who is using buy now, pay later? Do we have line of sight in there? I'm prompted a lot to use it, but do we have any kind of line of sight to just the average demo, Dan?
Yeah, so what's interesting is it's got the reputation of being steered more towards like people that don't have access to banking, et cetera, but it could be anyone.
That is the rep, for sure.
That is the rep, right? But I think it's a little bit misunderstood because remember, during COVID, everyone was buying Pelotons on Affirm. And that was like your neighbors, right? It wasn't only people that don't have access to credit. So I would say it's mostly skewed younger. So if you think about it, this like 18 to 34 cohort, kind of right where I am, just kidding. That 18 to 34 cohort, younger, and I would say just younger. I think there's a preference. I wouldn't say necessarily not as wealthy, more younger. And that's the key thing. Young people don't trust credit cards, don't trust banks. This is a very big lure for young people.
Let me ask you this, because we talk on the show about concerns about the macro and whether the economy could get kind of weak here. To the extent that the economy does get wobbly, Dan, that would mean what for BNPL, the industry and the players?
So the rep is it'll go bust.
Right.
Right? So we hear that all the time, right? I'm an analyst, I cover all these names. The rep is like it's never been tested in a bad macro. We think about this a little differently. Because it's never been tested, it could go both ways. And one of the things to consider is that it could be somewhat counter-cyclical. And let me explain. The reason it could be counter-cyclical is because it helps companies make conversions. So it helps e-com retailers sell something they couldn't sell using a regular credit or debit card. So if the macro turns south, there is a possibility that merchants are going to want to convert more. So they're going to basically steer consumers more towards buy now, pay later. So there is an we've never seen this before because it's a new industry, but it's just as equal or just as likely that it would be counter-cyclical and thrive during a worse economic environment.
Let me ask you this, as the BNPL market grows, Dan, what kind of risk, what kind of challenges that pose to other names you cover, specifically the credit card names?
So it's really, I mean, as the buy now, pay later market grows, it really mostly hurts the banks. So the banks, like the JP Morgans of the world, et cetera, because they are the ones that are extending credit today. It does not really hurt, say, Visa or MasterCard because all these BNPL transactions are actually getting settled using debit. So they're actually turning one transaction, like Visa is turning one transaction into 4 because you have to pay like 4 times. And Visa makes money off of every transaction. The real short end of the stick is coming to the banks, like they're the current incumbent credit card operators, like the banks. Basically.
Let's get some picks, all right? Give people some opportunities, some names. Affirm, you say, is still a buy. Stock's up about 30% this year. Why is it still a buy here, Dan?
The TAM is unlimited and the execution is epic, right? So you don't often get that sort of
Max Levchin's execution is epic.
It's max execution, right? There's literally like 2 or 3 companies in our space where you have that perfect marriage between a great idea, great execution, and product velocity. That's Affirm and Robinhood, right? Those are the 2 names that you could basically say they've got it all. And when you talk to Max, he just tells you, I'm all about taking risk. And I think that's the key differentiator between them and Klarna, right? Compared to them, Klarna looks pretty pale, right? Klarna, which is the other big...
How so? How does Klarna look pale?
Because they're mostly doing buy now, pay later or pay in 4, whereas Affirm has a plethora of different offerings. They can do pay in 4, pay in 6, interest bearing, non-interest bearing, underwriting those is much more difficult than underwriting sort of the basic paying for that Klarna does. And so if anything, let's say gets weaker as the economy goes south, if it does, we don't know. Right now things are great. It would be sort of the more simple paying for. So Affirm has still a lot of like future potential because of that specializing in this like interest-bearing loans, which are the key, the hardest thing to underwrite.
What about PayPal? You say that one's about here too. Now that one, we're down about 20% so far this year. What are the catalysts that move that one higher?
So it actually ties everything goes back to sort of buy now, pay later, right? Like everything is sort of, so buy now, pay later, and I'm actually really glad you asked it, because buy now, pay later is part of the new branded checkout button. And so as buy now, pay later grows faster, right? And their plans is for buy now, pay later to grow in the 40s over the next 2 to 3 years. That should actually accelerate the branded checkout button growth. And by the way, what I'm hearing is they're crushing Klarna in Europe.
Crushing Klarna.
Crushing.
Yeah.
Merchants are rolling out the red carpet in front of PayPal in Europe.
Interesting.
And so as this does better, the branded checkout button is going to accelerate because it's part of it, right? They're offering like a much better value proposition, right? They don't put you on some sort of a marketplace. They don't charge you affiliate fees. So merchants love it, and that's why they're gaining share.
I have to ask you this one last question, my friend.
Sure.
I think I have this right. I think you only have, Dolev, one underperform. I think you only have one sell. It's Circle. How come Circle is a sell? Isn't this the great way to play the mega trend of stablecoins?
I had to, it's a sell, but it's like a sell with passion. It's a very passionate sell.
The best kind of sell,
It's
really.
the best kind of sell. I'm very excited about this sell opportunity. It's so special.
Excited about an underperform.
And it's so special
Walk me through
that I
it.
have one of them, right? It's sort of like, it's like gold. I treat it like, they get a very special treatment in our little franchise. I tell you, the one fallacy about Circle is like, rates go up, go down, their revenue goes down. The distribution of USDC, which is how they make money, is basically flat at $68 billion. It literally only moved like 10% since April, right? And distribution costs, which is what they have to pay to Coinbase, Binance, God knows all these apps that are proliferating the USDC, is actually is getting worse and worse over time. So you're getting basically like a confluence of different forces. There's almost no chance that revenue is going to be what people think it is by the end of the year. I mean, unless you think that rates are going up and that they're going to gain share from Tether, which is not happening. So basically one minus everything you think, that's what's going to happen with Circle. So it's a very passionate, very passionate.
Underperform. Passionately buy on Affirm, though, I think. Is that fair?
Exact inverse.
Exact inverse. Dan, great to see you, as always, my friend.
My pleasure.